Hey, folks, welcome to InTheMoneyStocks.com's weekend technical analysis video brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, let's get underway. This video, just to reiterate here, is for the week of Monday, January 18th through Friday, February 1st, 2013. The markets last week saw some solid gains. It's been continuation of exactly what I called for. So again, flashback to the weekend technical analysis video that I did 2 weeks ago when we were trading. Really, if you go back then, we were hovering all the way down around the 145 level or so. And I said to you guys, the markets will continue to float higher. Your target is 150 on the SPY, which is the equivalent on the S&P 500 of 1500. And again, that was 2 weeks ago. Last weekend, I said the markets will continue to float higher. Look for more upside on the markets. Sure enough, this past week, that came 100% true. The target I gave, 1500 on the S&P, 150 on the SPY. Guess where we closed on Friday? Exactly there. How did I know this? Well, simply put, it's the PPT methodology. It's the strategies proprietary in nature that we have come up with here at InTheMoneyStocks.com. And again, I teach it to my members. My partner teaches it to his members as well. We will unveil it all, let you pick exact tops and bottoms, the market's direction, stocks, everything. You want to know where it's going? You can figure it out by looking at the chart. Very simply. All right, 80 to 90% success rate. That is nothing to sneeze at. There is no other firm, even hedge fund or institution, banging out profits like that with such a success rate. Okay, let's go into the exact analysis now going forward. I want to be very, very clear about this. I am making a new prediction. I said floating up the last 2 weeks to the 150 level on the spiders, and that's what we did. What I'm saying now is next week the market will top out. I repeat, short-term top in the market next week. Now again, I'll be slowly accumulating shorts in the coming week and making money just like we've made money year after year here at InTheMoneyStocks.com. Why do I think it's going to top out? Well, there's many, many reasons. But number one, you're coming into some major resistance here at the 150, as I said, to the 152 level. All right, you have going back to 2007, these are your next major resistance levels. The next major one, you have 150, which is a major pivot point, and then you have 152 and change. I believe that between 150 and 152 and change, the market will make a short-term top. Many people are thinking the markets will get to all-time highs, taking out the 2007 highs. In the short term, I do not believe that is true. I think they have everyone thinking it's going there and probably higher, and that's why the individual investor, the retail investor, is piling in the market. And just to reiterate that, folks, over the last few weeks, more money has flown into mutual funds than since 2002. Think about that. In the last 11 years, there has not been a period where more money has gone into the market, into mutual funds, in a short week or two period. What's so shocking about that is that who's investing in mutual funds? I mean, think about it. You know, does the institution invest in mutual funds, or does the average retail investor who has a 401k and he has a bunch of mutual funds to choose from, are those the people investing? And obviously, it's the retail average investor. And what do we know about retail average investors? Retail average investors are always buying the tops. You know, it's funny. Leading the nightly news on NBC tonight, folks, was a story about the markets and how the individual investor was jumping in because they didn't want to miss the run-up. They felt better about the economy. They wanted to get back in. Miss the run-up? Seriously? Are they smoking crack? Look at the markets. 2009 lows were at under 70. You are well over 100% higher in the markets right now. So you worried about missing the move, really? It just blows my mind, to be honest. In this move up across the last few years, we've been long, we've been short, we've been long, we've been short. I mean, we've been long and short countless times, but the point is, again, it's such a sad thing. I wish I could talk some sense into the average investor. Obviously, average investors that come to In the Money Stocks and join, we do, and we teach them the true ways to manage their money appropriately. But, I mean, it is just mind boggling. It really is to think that now they're putting money to work. I wish I could get on a loudspeaker and just get them to be cautious here. Because again, time after time, who do you think was investing in 2007 right back here at the highs? Do you think the institutions were piling in on the long side, or do you think the banks and institutions knew what was coming right over here and were unloading to all the suckers out there, the retail investor? And I think I don't even have to say the answer to that to let you guys know. Obviously, the retail investor was the one buying here. Who was buying down here and who was selling? The retail investor was selling, the institutions were piling in on the long side. The institutions knew the Federal Reserve was going to bail them out. We actually were in the long side on the financials in the lows of 2009. Our members can attest to that back then. And again, we've been running this company and giving our proprietary methodology since 2007. So we called the top here and the collapse, we called the bottom here, and we've made long and short calls on every basic move up and down on every major market move in the market since then. And again, it was so funny. I still remember in 2007, Nick and my partner and I, Nick and myself, we talked to institutions and hedge funds, and we talked to our investors and members here at InTheMoneyStocks.com, and we said, guys, this is coming. This is going to be bad. Be ready. Everyone was like, you're crazy, you're crazy, you're crazy. And then all of a sudden, you had the markets collapsing from 157 on the spiders down to under 70. I mean, literally over a 50% collapse. Who had egg on their face now? I mean, well, unfortunately, I don't like to rub that in because a lot of people lost their life savings, people that didn't listen to us. But bottom line is, my point is the methodology is sound, and it tells you, it keeps the emotion out of the picture. The emotion is what gets you in trouble. When you're listening to the hype in the media on CNBC or this nightly news or whatever, I mean, think about where the VIX is trading. The VIX is trading at pre-2007. Just before the markets collapsed, that's where the VIX was, at around 12. Could the VIX go down to 10? Yeah, sure. But it's not going to go much lower, folks, if even down there. And the VIX is the volatility index for those of you guys that don't know. So, I mean, just keep that in perspective that, if you look at it in terms of where it's trading, it's very ominous. It's very scary. Now, again, I want to make this clear. I'm not saying that right off the bat you're going to see a major collapse in this market. Not for at least a year will be the major collapse. But I'm saying short term, if you look at certain charts, they are into major resistance or they're coming into major resistance. First of all, look at the spiders here. This is the mirroring of the S&P 500. But look at this vertical move, the extension away from the 20 MA. Technically speaking, that's a chart that needs to pull back. Okay. Now, personally, I think the markets are still going to have a little bit more upside next week. I think because of the pumping of this weekend of the 1500 level on the S&P, you probably get a gap up on Monday. I will most likely utilize that to short the markets a little bit. All right. It's always using. I hate to go against the average investor, but what choice do I have? I mean, I have to. I'm not going to sit on the sidelines and just not make money because I know something is a good play. I tell as many. I mean, I'm doing this as a free video. Anyone can listen to this video. You know what I'm saying? So I feel like I'm doing my public service by telling people. It's up to them if they want to listen at this point. But again, we'll just be making money here at InTheMoneyStocks.com using the PPT proprietary strategies, which again, we're so willing to teach every aspect. It's funny because institutions have these black box trading programs and high frequency trading, and they keep it very quiet, hush hush. They got their proprietary stuff. They're not telling a soul. I'm here. And I'm going to tell everyone because I want people to be able to compete with the institutions and to profit over the institutions and make money back that the institutions have taken away. It's not right that the average investor, it's just a transfer of wealth. Markets, when people don't know, when the average investors get caught like this, it's just a simple transfer of wealth, which is so sad. I mean, to think that money just gets transferred from their hard-earned pockets to these institutions and to the big wigs' pockets is not right. And so I'm doing my part. That's all I can do here, telling everyone, and I'll continue to tell anyone who will listen, how to trade the markets properly. Bottom line is, again, spiders getting extended here. Even if we inch up next week, and again, I say the top is in next week, I think we could get up to about 152 or so, but anywhere in that range, you have a short-term top put in. You can take a look that since the last major dip here, you've had three peaks, and what we say is three peaks to a valley. So one, two, and this is the third peak. The third peak is usually the most dramatic in terms of consecutive moves up, and really the third peak, here's the first peak right here, which went from 127 to about 148. The second peak was from 135 to approximately, now we're sitting at 150 or so. So again, you can see the nature of this. This one took a little bit longer. This one's been a little bit sharper. And again, one, two, three peaks. This should be the final peak before a nice little dip. And then, if we go up after that, who knows? We'll go long if we have to. But again, I do think the markets are due for a pullback. You can take a look at certain stocks. Take a look at 3M. You want to see a ridiculous chart? This stock reported earnings earlier this week, but not one red day in the whole new year so far. That's incredible. You don't see that very often in stocks the size of 3M. So my guess is, again, it pushes up. It comes up a little bit more, maybe into the 101, 102 area, and then you probably get some sort of pullback. In terms of levels, take a look at a stock like JPM. All right, JPM still could go a little bit higher, which coincides with the market maybe putting in a top next week, so a little bit higher in the markets, and then look at that pivot right there. Pivot high from 2011, right around the 48 level, 48 and a half level, and again, that's actually only about a buck and a half away at this point on JP Morgan. So that's got to be looked at as a very important level. You want to see some other crazy things? Look at the spiders and go back to the spiders chart. All right, what I want you guys to do is take a couple trend lines here. Let's put some trend lines in to show you exactly just some little nuance of what I'm talking about. Take this pivot high from 2011, continue it to the highs of 2012 right there. What do you have? You have a trend line that is just a little bit above current price. Just a little bit above. And again, you can extend that, but it runs out of space there. But it's right around the 151, 152 area, and that's if we go straight up. So I'm thinking, again, early in the week next week, a little upside, and then you put in that top and you start to get a pullback. But that's a great little level right there, folks. Absolutely phenomenal little level. Plus the 152 pivot right here, very important as well. And by the way, even if the market squeaked through 152, look at how many trend lines of resistance there are on the way up, and finally you get to the double top. So, I mean, even if we do push up there, it's not that much further until you're at an all-time high major double top from 2007. And the question has to be asked is, are we really doing that well compared to where we were in 2007? I mean, unemployment, for instance, was, 3%, 4%, whatever it was back then. Now we're at close to 8%, and that's if you believe the government numbers, which is always suspect because they don't necessarily report everyone. But the key here is to recognize that it's the Federal Reserve. It really is the printing of money that's inflated and the abnormal interest rate level. Because what happens is when money is sitting in a bank account and it's making half a percentage a year or a quarter percent a year, even in, CDs, you're making 1% a year. People don't want to keep the money there. People don't want to keep it in low yielding things. They want to put it in the market where they see the market right now giving a lot of return. Well, hell, I could make, if I invested at the beginning of the 2013 year here, just in the last couple weeks, 4, 5, 6%. That's a lot more in a month than I could have made in a year in a CD, for instance. And that's the scary thing, too, because what will happen is it's coaxing in all that money, and then the institutions will come in and just smack it around and take it. So, again, you just want to be smart about it. It's really logical if you think about it. One of the analogies I draw between the average investor's mentality and what they do in the market is between a shopper. All right, you go to the mall, right? Let's say I'm going to the mall, and I walk in to, I don't know, Macy's, J.C. Penney's, wherever it may be, and I need a pair of jeans, let's say. Do I walk in and I look for the priciest pair of jeans that they just jacked up 100% the day before? Is that the pair of jeans that I'm rushing in to buy? And the answer is no. Usually you're looking for the one that's on sale. Yeah, it's good quality. You want to find something good quality, but you want to find something with a good deal in good quality. Well, that mentality of good quality, a deal, should be used in the market as well. And the average investors don't do that. What they do is they see a stock that's running up crazy and they want to jump on board, like Apple at 700. I mean, geez, I was saying sell, sell, sell Apple at 700 while institutions were buying. And again, look at what happens. I mean, or I shouldn't say institutions were buying, institutions were telling the average investor to buy, analysts were upgrading. But look at what happened. I mean, another great call by us here at InTheMoneyStocks.com. And actually, we have a new target on Apple to be a buy when it comes down to this level. So, again, if you join the Research Center, you can get involved and get that. But, again, bottom line is, let me just summarize, folks. Markets, again, should top out next week for the short term. We should see a pullback late next week or the following week. And again, the pullback may not be dramatic at first. I think a pullback really from, the 150 to 152 level back to 148, 147 is what's most likely going to be in the cards. And then we'll see if we get more after that. But again, that's the key here. That's my analysis. Been nailing the market every single week so far. And these are the free videos, guys. Just imagine what you get in the Research Center, which is for swing traders and investors in at InTheMoneyStocks.com. And by the way, there's a 7-day free trial, so it's like, well, that's a no-brainer. All right, folks, I'm going to get going here. I hope everyone has a fantastic weekend. It has been an awesome couple weeks in the new year so far for us here at InTheMoneyStocks.com. We encourage you to come check it out. And again, just take that 7-day free trial. Have a great weekend. I will talk to you soon and look forward to having you here at InTheMoneyStocks.com.